Hello, my name is Erin Bramlett from the Federal Home Loan Bank of Topeka, and this is the training for the mortgage rate reduction product for 2026. The information presented in this training materials is for general information only, and it's based on guidelines in effect at the time of the training. The mortgage rate reduction product provides a lower interest rate and reduced principal and interest payments for borrowers whose income is up to 80% of the area median income, or AMI, as provided by the Federal Housing Finance Agency, the FHFA. The interest rate for the borrowers will be up to 2% below the market rate and will be announced soon. The rate is subject to change during the time the MRRP is available. We will notify you if any changes do occur by email. The AMI table is also used by Fannie Mae and Freddie Mac and can be found on the EMPF websites on the home screen under the Quick Links section on the right side of the screen. Participation is limited to members who are approved participating financial institutions, or PFIs, under the MPF program with an active master commitment in the MPF traditional products, including MPF Original and MPF 125. The only restriction we have added for MRRP for 2026 is you are not able to charge points for the right to use MRRP, as this is designed as an affordable housing product. The unnecessary additional cost to the borrower run counter to its intent. This in no way impacts origination fees or any other fees that the lender normally assesses to borrowers. Just a reminder that tax transcripts are required for every loan, regardless if it's chosen for a quality control review or not, and must be in the file prior to funding. We do have a $4 million PFI volume limit for this year, so $4 million. Please monitor your fundings under this product, and we will notify you when you are close to reaching your limit as well. And just keep in mind that PFI volume limit is available as long as voluntary funds remain. We will keep the MRRP website updated with the amount of funds remaining, so you can check there to see if funds remain. The turnkey down payment products, including HSP, HSP Plus, and HOPE, can be used in conjunction with MRRP. Keep in mind that turnkey products utilize the USDA AMI table, while MRRP uses the FHFA AMI table. So when you're utilizing a turnkey product with the mortgage rate reduction product, you will need to follow whatever the more restrictive requirements are. Turnkey also is required to only be properties in our 4-state area, so Kansas, Colorado, Nebraska, and Oklahoma. You will also include the grant funds in your CLTV calculation and indicate on the loan presentment that FHLB AHP funds are being used following the requirements in Section 4.4 of the MPF Selling Guide. We have established you will verify borrower eligibility based on the FHFA income limits and where to find those. Standard MPF underwriting guidelines will apply. You can still use automated underwriting, including DU or LPA, or a manual underwrite, whichever you prefer. Property types, 1 to 4 family, owner occupied. Condos and PUDs are perfectly fine. No second homes are eligible. All transaction types are eligible, including purchase, rate term, and cash out refinance. And when you're using DU or LPA, you are welcome to use appraisal waivers or one of the hybrid appraisal options if you happen to receive and approve eligible with that. For any questions on those items, please reference MPF Announcement 2024-41 for more details. The important pieces of underwriting loans for the mortgage rate reduction product. You will be documenting all qualified income for all owner occupants of the subject property. All occupying owners on title must be borrowers on the note, and you cannot leave an eligible borrower off the note or title. All borrower income must be disclosed and documented in accordance with MPF guide requirements. And we have provided an income decision tree to assist with determining if and when income should be considered. Again, you must use all eligible income, even if it's not needed for loan approval, specifically for MRRP loans. Things to keep in mind for MRRP loans: this is a permanent rate buy-down, and reimbursement of the discount amount is handled after loan closing. So this means your borrower will get a low rate for the life of the loan, but there's nothing to notate on the loan estimate or closing disclosure, and no second lien to file. A standard early payoff will apply for loans paid in full within 120 days of funding. The PFI will be required to pay back the premium amount paid at the time of funding, as well as the subsidy funds paid, which we will cover in more detail shortly. You do have the ability to sell servicing, retain, or release for this product option, whichever pertains to you. The interest rate for the mortgage rate reduction product is found with normal MPF pricing under the 30-year product, then the fixed 30-year permanent buy-down FHLB sub-product. Once you have completed training, you will have access to this pricing. You will see the standard pricing view as you normally do, identifying the interest rate available and the commitment term. The pricing will be the same regardless of which commitment term you select. So 5 to 60 days does not matter what you see on your screen. Everything will be priced at 1.5%. So take advantage of the ability to lock that out for 60 days if you need it. Your institution will be paid a premium amount of 1.5% of the loan amount, regardless of the commitment term you select, and will receive a servicing fee or servicing release premium, depending on which is applicable to your institution. Delivery commitments are mandatory, meaning pair-off fees will apply and are calculated exactly the same as they are calculated for a normal delivery commitment. Delivery commitments may be extended up to 30 calendar days, keeping in mind that extension fees will apply, which is why we recommend locking for 60 days so you have plenty of time. You'll enter into a normal delivery commitment in eMPF the same way that you would for any other delivery commitment. The only difference is you'll select the permanent buy-down sub-product. The delivery price will appear as a large discount, for example, negative 4.3088%. Even though the price shows as a discount, you will actually receive a 1.5% premium when the loan funds. So using an example of a $216,000 loan, we'll take our $216,000 times our negative 4.3088%. That will give us a discount of $9,307. We take our loan amount times 1.5% to give us a premium amount that you'll receive as income for $3,240. So our total altogether, the buy down and the premium will be, for that example at least, $12,547.08. And just to give you an idea of what it looks like when you actually fund, this is what you'll see on your DDA statement in members only. There will be a credit for the total subsidy, so the total of the negative discount amount and the 1.5%. You'll see a credit for the full loan amount, a debit for the interim interest, which is a normal part of the process. And then lastly, there will be a debit for the agent fee since it was a discount. You will net out the rate reduction subsidy credit with the agent fee debit to come up with your 1.5% agent fee. So in this case, our $12,547.08 subtracted the $9,307.08, and that will give us our total of $3,240. If you sell servicing release, your SRP will be credited as normal, so there's no difference to that process at all. Borrowers do not have to be first-time homebuyers, and no homebuyer education is required for this product. Again, we accept all loan purpose options, purchase, rate term, refinance, and cash out refinances. And MRRP is not district specific, so loans can be located in any state, not just Kansas, Colorado, Oklahoma, or Nebraska. We do request a delivery commitment is locked on a loan-by-loan basis, and this is just to help us monitor activity. Again, no special paperwork for your borrowers to sign because everything will truly be handled after the fact outside of assigning the loan. Your institution will be limited to $4 million as long as subsidy funds are available. Loans are accepted on a first-come, first-served basis, and we will keep our website updated as funds are utilized. As with all MPF loans, we do not provide front-end underwriting, so making sure all eligible income is included, even if it's not required for qualifying, and all of that will be on you, just as it normally is. But please reach out to us for any questions that you might have, because we're more than happy to help from that respect. That brings us to the end of training and your next steps. If you do not have an active MPF Original or MPF 125 Master Commitment, please reach out to us to help get you set up. If the product is available and you cannot see pricing, please again reach out to us so we can make sure to get that updated for you. You may need to reach out to your pricing engine to request this product be available in your pricing list. And lastly, if you are not a PFI currently but would like to participate in this product, please reach out to our MPF sales department and they'll be happy to walk you through the process. We are really excited to offer this voluntary product again and look forward to working with you in 2026. Thank you for participating.